in 2015, when the retail balance sheet started shifting, and by the way, it has not made such a big shift as people think. Trailing 10 years, in Indian households have still put more cash in their cupboards than cash into equities. They put more cash into gold than into equities. So we're still at the tip of the iceberg. We have really not traveled this journey. There are only two players in the market. It's either a domestic investor or a foreign investor. If every morning, even through this fall, at 9:15, if a $100 million bid is coming from domestic investors relentlessly, somebody has to sell. Otherwise, how do you get a trade? Even in the open outcry system, there was a trade, and there the market maker would go short. Somebody has to trade, right? Somebody has to sell. So unless the issuance cycle reemerges and the third player comes into the market, which is the corporate sector, comes and offers stock, I don't think foreigners can come to buy. Now, a couple of things let me just say here is that when we look at emerging market portfolios, the underweight position of foreign investors is now to an all-time low. So they are more underweight on Indian stocks than they have ever been in the past. The last position was in 2007. The other thing that I'd say is that India is hurting considerably because of its classification as an emerging market. The emerging market cohort is no longer the story that people dreamed about in the mid-90s. So it is unraveling, and a lot of assets in that cohort are shrinking, and India is facing some of that brunt as well. So it's important, if you ask me, I think India needs to diversify its sources of capital. We need to allow other pools of capital to walk into Indian stock markets, and that would then ensure more secular flows. But in the meanwhile, I think somewhere in the next few weeks or months, I think foreign investors will start coming back. India has considerably underperformed China. China is up 50%. Yeah. September 25th, and I have to say in hindsight, I underestimated the Chinese policy stimulus then. It seemed in the wrong direction, but it proved to be a bottom for the Chinese stocks and a top for the Indian stocks. And the relative chart now looks really juicy for India. So those who are waiting for India to get more attractive in valuation terms and in performance term, I think the moment has come. And one last point, I like to measure the Sensex in gold ounces. I've been doing that for 30 years. This is the cheapest the Sensex has been in gold ounces since November 2020.
Sorry, can you explain that?
How much Sensex can you buy with an ounce of gold?
Achha, okay, fine.
Okay. So this is the cheapest since November 20. It's like COVID.
Oh, okay. Okay.
So people like to measure the Sensex in earnings term, in INR terms, in dollar terms. I like to also measure it in terms of gold ounces. So
interesting.
This is the cheapest it has been in 4.5 years.
Wow. Okay.